All right, all right, all right. Good evening, everyone. It's Friday, the last day of February. And did we get another dead cat bounce today? The end of the day? We're going to look at that. Sure felt like it. I told everyone earlier in the week that I was expecting a relief rally. That's one of the reasons I did not go into inverse ETFs because the market was very oversold and it was due for a rally. So this could actually last into next week. We'll see. We'll take a look at it in a minute. So first, as always, I am not a financial advisor. I'm doing this for educational purposes only, and I'm not making any recommendations to buy or sell anything. So you have to make your own decisions. Past performance does not guarantee future results. All right. Let's take a look at what the market did today. And even though we had a nice bounce at the end, the market bias still went down, actually is now at a new low. This goes back to November. So basically about 3.5 months. So now we're at a new low. We'll see how that bounce does into next week. I have not looked at these charts yet, so we'll take a look at those in a minute. This is my website, breakpointtrading.net. You can go here if you would like the free newsletter that comes out every week. The link to the YouTube channel is here, but since you're already here, you should know how to get to it. I am also doing a monthly Zoom call, which I do every month with subscribers. It's just basically an open forum where anybody can ask anything they want. We'll talk about stocks, we'll talk about indicators, technical analysis, charts, whatever you want, whatever anybody wants to talk about. And if you come to the main page and click on this only for subscribers will take you to this page. And you can click here for the Zoom. Now, it's not active, of course, so there's not going to be anybody on it until Saturday at 2 p.m. So March 1st at 2 p.m. Eastern time, that's when the Zoom will start. But for those that are subscribers, you can get into that. For those that would like to participate, you could become a subscriber between now and Saturday. And I record them, so all the previous recordings are right here. You can see this, they last anywhere from 2 to 3 hours. Depending on what else I have going on that day, basically. But for those that are interested, that's where you can go. Now, the very bottom of the homepage is where you can sign up. You can sign up for the website. If you want to do a free trial, you can do the monthly. And then you can cancel if you don't think it's for you. If you just want to get the newsletter, get notified that it's there, the $0 does not ask for a credit card, and we do not share emails. So that's just to get on the list so you'll notified when the newsletter comes out. And if you want all of the data and content that I offer, $99 for a year, which is pretty cheap. My financial advisor, when I showed this to him, he said this should be $99 a month, and he signed up immediately. So there's lots of great content. I'm going to actually start with this because there was a question yesterday on the channel where someone said, does this mean that the secular bull market is over? Because we've had a lot of selling this week. And the answer is emphatically no. One thing I'm going to do here, because I had this question too from people that first sign up, I get this every so often. I'm going to show you a way to expand or contract your screen. Sometimes people contact me and say, I can't see all the components. I can't get to certain things on the screen. Usually it's because of this. And what I'm going to do right now is push the control key. I have a Windows machine. Push the control key and the plus key, and it makes it bigger. So if yours is already big when you log on, so you can't see everything, just do a control minus sign, and it makes it smaller. And if you have an Apple machine, use the command key, command plus and command minus. That makes it bigger and smaller. In this case, I'm going to make it bigger just so you can see it. And then I'll probably contract it in a minute. So this is the secular bull market. Secular markets typically, secular bulls typically last 18 to 20 years. Secular bears typically last about 12. So the last secular bear was from 2001 until 2013. That's 12 years. 2013 was officially when it broke out. The bottom was actually 2009, but you didn't know if it was going to go up just like it did back here, hit up against this resistance and go down again. You don't know that until it breaks through. So you could count it from 2009, but officially it's 2013. So we have been in a secular bull ever since then. And you can see the previous one right back here. This one started in 1982 and went until about 2000, 2001. So that was almost 20 years. This one right now is from 2013 and projected to last until roughly 2029, 2033, somewhere in that neighborhood. But for those that want to know if the secular bull is over, just come to the homepage. There's no subscription needed for this. And go down to the middle of the screen and take a look to see if the bull is over yet. You can see we came down close to it a couple of times, 4 times. This one here was COVID. That one was COVID. This is 2022. So these never went below that pink line. They did back here in the bear market. They never did in this bull market. The next one down here is, so this is relative strength up here. This is the momentum MACD on this one here. It has not gone below 0. This is a monthly chart, by the way, so very long term. Did not go below 0, but it did for the secular bear. This is when it started. Has not done it through this whole period from 2013. That's when it went above 0. Down here is the 200-week moving average, this red line. Again, it never closed below it. Got close to it here in 2016, got close to it in 2018, the trade war. Actually went below it in COVID, but did not close below it, and came down in 2022 and touched it right there. We're not even close. We're nowhere close to it right now. So what this means is, yes, the secular bull could end, but in order for it to end, all of these things have to get all the way back down here again. This is a monthly chart. So that will take quite a while for that to happen. That will probably take at least a year, probably 2 or 3 years for these things to roll all the way over and get all the way down. Now, we certainly could have a cyclical bear market like we did in 22, and these things can potentially roll over. So right here, it rolled over in beginning of 22 to October. So that was about 9 months. Never went below the pink line, though. So to get below it would have been probably about a year for that to happen. So this is the thing to look at if you're ever wondering if the secular bull is over. It is not. We still have a ways to go. So any recession we have will likely be short and shallow. Any cyclical bear market we have will probably be similar to 22. Could last 9 or 10 months. It will feel painful, but it will probably recover. All right. The next thing I want to show you is percent. So here's what I mean. You can see it kind of off the screen over here on the left and the right. So I'm going to do a control minus sign and bring it back in. So now you can see everything. So there's the market bias. Let's look at the S&P. S&P today had a really nice bounce back. It did not recover everything from yesterday. But it had a very nice recovery. And you can see the momentum was just starting to curl up now. This is why I said this could last into next week and maybe even further. So the next thing to watch is what happens when it gets back to the mean. That's the 21-day right there, probably around 6,000. We'll see what happens. It ended today at 59.54. It actually went down below that 58.50 level, but it did not close there. So good news. That looked pretty good. Let's look at the NASDAQ 100. Should look similar. Actually, barely made it back to the middle. So this wasn't as strong as the S&P. Just barely came back to the middle of yesterday's range. So it needs to get back up here, and we'll see what happens when it gets back to the 21 day once again. And of course, we'll look at Bitcoin. Let's see what it did. So it had a really big sell-off in the morning, and you can see it came all the way back. Didn't quite make it back to its open, but pretty much came back to roughly where it was the last 2 days. So not too much damage today, even though it was down a lot. So that could have shaken out a lot of people. I read an article where a lot of the later Bitcoin buyers, people that bought back through here, just like in the last couple of months or last few weeks, thought that Bitcoin was going to the moon, like everyone was saying. So they jumped in. So I read something that said most of the selling is the recent buyers. It's not the ones that have held it for a long time. Certainly, it's not Michael Saylor. I'll talk about that in a second, too. So anyway, that's what Bitcoin looks like. We'll look at a couple of others. The bias matrix, you can see it's still going down, yellow, red, yellow, lots of things, lots of red bearish signals. That typically happens because there's momentum that carries these into bearish signals. And it will take probably a couple of days of a rally to get it back, to start back higher again. Let's look at gold, though, see what gold looks like. So gold has been selling off for the last 4 days. And even though it has a nice hammer, so that implies a reversal, has huge volume today, big gap down, definitely below the 21 day. Another day like this, in fact, if it doesn't rally significantly, probably by Tuesday, it's going to get a short-term bearish signal. So this one will turn red. We can look at the gold miners that got a bearish short-term signal today. Even though it had a nice bounce today, the momentum carried it down. So it got a short-term bear signal today. So gold looks like it's kind of rolling over and going down a little bit. What else was interesting? If we go to the charts page, I added a chart here about Bitcoin and MicroStrategy or strategy. So this is a correlation chart. I showed previously the correlation with the NASDAQ, but let's look at correlation with MicroStrategy. So there's MicroStrategy. It had a bounce back today as well. It went below its 200-day moving average. I'm sorry, that's Bitcoin. This is Bitcoin and MicroStrategy together. So, and down below is the correlation. So if it's getting near 1, and right now it is at 91, so 91% correlation. If it gets to 1, then it is absolutely completely correlated. That means every move that one makes, the other one makes. But at over 90%, that is extremely correlated. Anything over 50% is correlated. So Bitcoin and MicroStrategy is highly correlated. MicroStrategy right here bounced off of the 200-day, trying to get back up there again. This is the Bitcoin that I showed you before. Went below the 200 and came back above it. So MicroStrategy and Bitcoin kind of run together. Someone asked me if, Bitcoin, MicroStrategy, I read that their average price is about 64,000. I've heard 66,000, somewhere in that neighborhood, which is down here. About 65 is right there. And some people have asked me, what if it gets back down to that where their average price is? Does that mean they're going to have to start selling Bitcoin? And the answer, I think, is no. I'm going to cover this tomorrow in the Zoom call and in more detail. But I think it's more important what the price of the company does, more so than the price of Bitcoin. Because Bitcoin is MicroStrategy is highly leveraged. Let me put it that way, as opposed to Bitcoin. So that's one of the big differences. MicroStrategy is highly, highly leveraged in order for them to buy Bitcoin. So when you buy MicroStrategy, you are not buying Bitcoin. It's not really a proxy for Bitcoin, even though it moves very similar. Notice all the gaps in through here with MicroStrategy. That's because Bitcoin trades 24/7, so there are no gaps, but that has an effect on how MicroStrategy trades. So sometimes you have to be careful because it could gap down or gap up very, very quickly, like it did back here when Bitcoin was going up. So while they are correlated, MicroStrategy is highly leveraged. And I think it's more important what the price of the stock is, more so than the price of Bitcoin. Anyway, my opinion. What else? I want to show you on the portfolios page. I showed this last night and I said the long-term trend has still not gone to cash. I said last night that it could today, but it didn't. And this is the reason that we use weeklies for the long-term strategy. What you can see is last night, this had closed below the 21-week moving average. Today, it pulled back above it. So it did not close below it, just like back here in August. It went below, but it did not close below. This is why we wait until the end of the week to let all the things that happen during the week kind of iron themselves out. Now, this doesn't mean it's not going to go down. I think the market probably is going to bounce at least into next week. So this could now reverse and go a little bit higher. We'll see. We'll watch it. But as of now, this long-term strategy is still intact. And you can see it actually went up. When I showed this last night, it was the same as the short-term strategy, 37%. The difference, even though they cumulatively, ever since the same date, November 3rd, were the same yesterday, this one had to be traded in and out, which means you're taking short-term capital gains instead of long-term capital gains. This one up here is going on almost a year and a half now that it's been in. So it went up a little bit more today. So we'll continue to watch that. The other thing I want to point out is I updated the dividend stocks, which I will do at the end of every month. And this is something that I do at the beginning of the year. I run some scans to find good dividend stocks. One's called the Dividend Aristocrats, and this explains what they are. It's basically companies that have paid out and increased their dividends every year for 25 years straight. If they miss 1 year, they drop out of this list, and it takes 25 years to get back in. So there's what happened last month, performance on these stocks. So I do some scans, and this defines what the scans are. Dividend yield of more than 2%, market cap of 5 billion, has to be profitable, all these things. The end of last month, and I scan in a couple of different ways. One, I scan for the stocks that have the highest yield. One is for the ones that have the highest 12-month performance in the last year. And one is using the technical ranking from stock charts. So what you can see is last month, the performance one performed the best, just barely above the yield. And it did so again, but even more so this month for Aristocrats. And right here, you can click on this. You can click on these to see all the stocks. You can see the ones that I narrowed down. You can see what the year-to-date results are. I'm not going to do that because I'm going to cover that in the Zoom call tomorrow with subscribers. So if you want to see that, you can subscribe. Dividend Champions is similar to Dividend Aristocrats, except they don't have to be in the S&P. So it widens the scope a little bit, finds a few more. What you see in this particular case, last month, the 12-month performance did a little bit better, but this month, clearly the ones with the highest yield in the scan did much better. So 9% there, and it did better than the Aristocrats as well. So the Dividend Champions this month did much better than the Aristocrats. This is for 2 months. Remember, this is a year-to-date number. So 2 months, 9%. I mean, some people would like to see 9% for the whole year. Now, there's no way to tell if that's going to persist till the end of the year, but we'll see it every month. We'll watch it every month and see what happens. The third one is the Vanguard High Yield. And this takes a combination of the Vanguard High Yield and High Performance list and runs the same kind of scans against these, a yield, performance, and technical ranking. The difference with this one is when I ran the scan up here, I got different stocks. So some of them had better yields where other ones had better 12-month performance, and still others had better technical ranking. So there were different stocks in each of these categories. However, when I ran the Vanguard High Yield, it was the same stocks. All of the scans returned the exact same stocks. So in this case, you can see they're all the same. So this one definitely outperformed out of the three last month, almost 7.5%, and this month almost 12%. So that was a pretty nice performance for the Vanguard group. And again, you can see all the stocks if you click on these buttons here, which I'm not going to do tonight, but I will do tomorrow on the Zoom call. All right, let me take a look at some stocks that people asked about today. First of all, let's look at the dashboard just to see what the market did. Look at equities, clearly 600 points up for the Dow. Had a huge day at the end of the day. Look at, you can see right there, right about 130, it just took off. Oops, didn't want to do that. Right about in the middle of the day, everything took off. I'm not sure exactly why. I don't know what came out at 130. I don't know. I'll have to research that. But that one took off. Bonds, 20-year bonds did pretty well. The 10-year came down. So now it's less than 4.25. There's the 10-year, continues to go lower. Gold, as I pointed out, was lower today. And the crypto, of course, Bitcoin was lower as well. It recovered, though, came back along with the rest of the market, but not nearly what the rest of the market did. As far as sectors, we've got discretionary, that's a aggressive sector. Communication services is aggressive. Technology down near the bottom of the pack. So as I mentioned before, it didn't even make it back to half of what it gave up yesterday. Not really what you want to see, but we'll see how long this bounce lasts for. Discretionary actually did much better today. We're going to look at the Magnificent Seven in a minute. That's one of the questions somebody had. And then on the industry groups down here, let's see if there's anything of interest. Semiconductors, look at that. Number 3 of the industry groups. And gambling, number 10. So if I go over to the website on the charts page, I can look at semiconductors and look at all the stocks in semis, and we'll look at the ones that performed best today. And Atom, I don't know what that one is, but it sold off quite a lot. Marvell is up near the top of the list. So, and there's NVIDIA trying to make a comeback as well, near the top of the list. And then for gambling, right here, gambling actually was one of the worst industry groups last week. I'm going to update these tomorrow. We'll see which ones are. But if it's red, that means it was the bottom 10 last week. But today it was at the top. So Valley, Penn National up there, Rush Street. Valley was up 14%. Las Vegas Sands. So those are the ones that did well today. And we can look at a full week. Valley's still up there for the week. So those are the best ones for today. And then of course in our let me go back to the dashboard. In our the top 10 group, SoundHound making a comeback. Not much of a comeback, but trying to make one. Gorilla, which has actually been going really well, had a great day today, up 22%. Not sure if they reported, but it looks like that might be it. HIMS trying to make a comeback as well. HIMS up 9%. So look at the second level down, see if there's anything of interest. Brinker had a huge run last year and then sold off. Roblox trying to make a recovery. The worst ones, Fubo, Duolingo, looks like they reported and missed way down there. What else? BYD, Chinese EV maker, had a bad day today. SMCI continues to decline, even in the face of a little bit of a rally. All right, one more thing before I look at some of the stocks is I want to look at on the charts page. I want to look at the 10-minute chart just out of curiosity to see what it looks like at the end of the day today. So here's the 10-minute with the aggressive sectors, and there's the rally right into the close. Actually, there's the S&P right around 2 o'clock. Just started going higher and just continued all the way up. Right. In fact, the last 10 minutes, which is often a lot of times the case, that's rebalancing. So you can't read too much into it with that volume down there, but technology sold off today. So this is we'll just look at today. Financials did pretty well. Discretionary sold off. Communication services went down during the end. So that's actually a little concerning, because with the market going up like that and the aggressive sectors selling off, let's look at the defensive. So healthcare stayed up there, staples stayed up there. Energy started to pull back a little bit. Utilities began to pull back. Materials has done well all week, even with gold going down. So it's kind of a bifurcated market. I don't know what this is telling me, other than this really could be a dead cat bounce. This could be short covering. So we'll see how long it lasts. I think it probably will last into next week, but we'll see how much further it'll take us. All right, let's look at a couple of stocks. One was, somebody asked me about Nike yesterday. So Nike had a nice run, pulling back. It's below the 200 today, although momentum is on its side. It's above the zero line, so it is definitely making a recovery, but it's not convincing. It's not a convincing recovery. Really needs to get back up here above this resistance line around 88 for it to have a good move higher. But it definitely looks like it's trying to recover. Had a little bit of a hammer at the end of the day. So Nike is a consumer discretionary. So this is basically the consumer, and this is something that we need to watch. Consumer discretionary. In fact, on the website you can check that out with this discretionary versus staples right here. So here's what it's been doing. When this is going down, that means staples, which are things we have to buy, is outperforming discretionary, which are things we would like to buy. And here's the weightings. You can see the top 5: Amazon, Tesla, Home Depot, Nike. That is a discretionary, and McDonald's. So, and on the staple side, Procter & Gamble, Pepsi, Coca-Cola, Costco, and Walmart. So right now, these over here in this group are outperforming these in this group. That's usually rotation. Wall Street is positioning themselves. So we'll see how long this dead cat bounces, see if it continues to bounce. So anyway, that's my opinion on Nike. I want to look at Lilly. Somebody asked me about Lilly. They have a position in it. I actually did a session here in my community last Saturday. A friend of mine was down in Florida, and he is really big into fundamentals, looking at why the company is doing well, what they're doing. Are they adding new factories? What is their potential for growth? What's the size of their market? And basically, he said this is his number one stock. And a friend of his told him if there was one stock to own for the next 10 years, it would be Eli Lilly. Just based on what they're doing, how much business they're bringing in, what the size of their market is. So there's a lot more potential out there, huge more potential out there. And the fact that they are building factories in the US to accommodate the demand that they're expecting in the future. So Lilly is probably one of the better ones out there. This is a weekly chart, so you can see it on a longer term basis, and you can see it had a pullback here, but it is now, it's basically its moving averages are all rolling over. It's on a weekly chart, it's above zero. So it likely is going to get back up here to the highs at 950 and will probably blow through it. So Lilly is a great one. I'm not sure if you want to put a stop. I always recommend stops, of course, for those that have watched. If you want to put a stop, you could certainly, I would put it under the 200 day rather than the 21. The 21 is going to continue to move higher, but at some point it's going to pull back. Stocks don't go straight up all the time. So you can see here a pullback right to the 200 day and then took off again. So I would, if I were to put a stop in, I would put it somewhere below the 200 day, down here at like 840, somewhere in that range, something like that. And if you really want to stay with it, put it at the 50 day, which would be down here at about 800. So the 50 day would be pretty safe. That's the point where institutions usually add the 250 or the 200. You can see they were adding right here when it hit the 200. I think right now institutions will probably be looking at the 200 because it's above the 50. So, if this has a pullback, there'll be a lot of people piling in. Now, there is a significant resistance up here that you have to at least be aware of. Doesn't mean it doesn't mean sell everything. It just means be aware of it. So right there at 950, that's the resistance. It likely is going to pull back when it gets there. Might pull back to the 21, which will probably be up here around 900 by that time. So that's the thing to watch. Watch that resistance level. But it could, actually what it could do is form a cup and handle. So it could get up here, pull back. All these folks back here want to get out at break even, pull back a little bit, form a little handle over here, come back up again. And when it breaks through 950 at that point, then the target for it would be about roughly about 720 down there. Minus 720. That's 230 points. Add that to 950. So the next target is about 1200. If it breaks out of that 950 area. So anyway, that's what I see with Lilly. It's a great stock, good one to own, just from a fundamental perspective. Let's see. I'm going to also take a look at some stocks that somebody mentioned that they bought at the lows. They didn't ask me to look at these, but I'm going to anyway, just out of curiosity. J&J. So this person said they bought them, a month or so ago. So probably down here, maybe when the 21 crossed the 50. Not sure when, but J&J looks great. That's continuing to go up. Pfizer. I'm not so thrilled about. Pfizer just going sideways. Pfizer's having a hard time. It keeps getting up to the 200-day and getting rejected each time. Now, all of these have dividends. So one of the strategies is to just buy it for the dividends. Tomorrow on my Zoom call, I'm going to look at all the dividend stocks that I just showed you the results for. And likely some of these are going to be in that group. The next one is KHC. This is Kraft Heinz. This is a Staples. So if we do get that rotation out of discretionary and into Staples, these are the kind of stocks that should respond. So it's starting to make a higher high, or higher low, I should say. So these are lower lows, lower low, lower low. And this might be, you don't know until it gets above this one. But this might be a beginning of a character change for this stock. It needs to get through the 200 right there. Momentum is on its side, but to get confirmation that it is now in a new uptrend, you need it to make a higher high, and that would be somewhere right up here around the 200-day. So this looks positive, but I'd say the jury is still out. And then UPS is just sold off hard after earnings. So earnings were on January 30th. That's right back here. So big sell-off right there. If you're a believer in the company, this is in the industrial space. If you believe in transportation group, and if you don't believe that a recession is coming, because a recession is going to hurt these kind of stocks. But it's moving higher. And one thing that I don't like about this, just from a technical perspective, is it's in a channel. It's in a very solid channel right now. Very narrow channel too. Just like that. So it really needs to break out of that. Channels like this often, but not always, break to the downside. So it could, when it gets to the 50-day, right up there, could actually break that way. Again, I'm not saying that it will. I'm just saying that narrow channels like this often break to the downside. So we'll see if UPS can recover. The ADX line is below 25. Green is just starting to cross the red. So it looks like it's got a lot of things going for it. It had a nice volume today too on that up bar. But I think it needs to get through the 50 and then the 200 up here. And the resistance is up here at 135. So when it gets back up to this level, it's likely going to get rejected and sent back down again. Again, another dividend stock. Dividend yield is 5.5 roughly. Just out of curiosity, KHC dividend is 5.2. Looks pretty good. Pfizer dividend yield is 6.5. So all of these have great dividends. J&J dividend is 3. So that's the lowest one of the whole group. So I suspect, in fact, I'm almost guaranteed that some of these are on my list because my first criteria is it has to have at least 2% yield, and all of these are more than that. There are other things on the list as well, but we're gonna see tomorrow when I do the Zoom call. All right, the last question that someone had is the Magnificent Seven, and in particular, I think they asked about Tesla and Amazon. We're gonna just go through all of them. So we're gonna look at the zoom in chart on each of these. So here's Google. Google had a great run and then rolled over, just clearly heading lower. Had a little bounce today. All these are going to show a bounce today. Amazon, not too good, has a bearish divergence. Apple actually, with my criteria, gave a buy signal, potential buy signal, because it closed above the 21 today. So Apple might be reversing right here, but still kind of ugly on the chart. Meta, it's just starting its downtrend. Microsoft has been terrible. Nvidia actually has a red bar, but it actually bounced back today, but didn't even make it to the 200-day or the middle of yesterday's range. So not convincing. Did have good volume, not as high as yesterday's volume, but higher than average. So that's positive, but it still has a lot of work to do. Here's Tesla. Tesla has just been selling off completely, got right down to the 200-day and bounced right there. So it's starting to come back up, but again, it's below the clouds, below the 20, below all the moving averages. The momentum is below zero, and the ADX line crossed over right back here at the beginning of February, right in this area where I have the down arrow. That was the warning sign to get out. Then it gave 2, 3, 4 warning signs right there, 5 warning signs. So all the warning signs were to get out right here at about 390. And now it's at 290. So that's $100 ago. Again, a lot of them look like this. I'm not convinced it's going to continue significantly. I think it might get a short-term bounce. Netflix is one of the best ones in this whole group, I think. So Netflix is just had a crossover, but still hanging above the 50-day. So Netflix actually still looks okay. AMD has just been terrible for a long time. Here's Costco. Costco had a green bar, bounced higher. Costco looks great right now. So big, huge volume on Costco too. So that is also in the staples group, staples sector. SMCI tried to make a comeback and now selling off. So the red's going to cross the green here shortly, maybe on Monday. Oracle, just nothing but red. Palantir continuing to sell. Now it's actually closed below the 50-day. And the momentum is just about to go below zero. So even with the bounce today, it probably will come back up here, reversion to the mean. We look at it on, I'll do that in a minute. What else do we have? Arista Networks, another one that had been really strong, selling off pretty hard right now, continuing to go down. And Broadcom also broken below its channel, and now it's below the cloud. So, and it's below all its moving averages, except for the 200. So it looks like it might continue. All of these, I think, are going to get a bounce into next week. But I'm just curious on Palantir. I want to look at the Keltner channels. So you can see up here, it got into the 4X and stayed there for quite a long time. So that's usually the extreme. It will reverse and come back to the mean at some point. Right now, it made it right down into the 3X channel and probably will come back up, revert to the mean, somewhere around the 95 to 100 area. And then we'll see what the rest of the market's going to do into the month of March. So it should be interesting. All right, that's it. Thanks for watching. Please like and subscribe. I want to thank everyone for getting me over 900 subscribers. That's fantastic. Let's keep it going. Maybe try to go for 1,000 next. If everyone wants me to continue looking at these and showing you some of this stuff, I want to please like and subscribe. And let me know if there's anything you want me to look at. So I will try each day to, at least at the end, take a look at any symbols that people put in the chat and just tell you what my perspective is on those. All right, thanks everyone. Have a great weekend, and I will talk to you again on Monday. Take care.